All right, here we go. Stocks by the numbers. Welcome back. Quick update here on Rockwell Medical, ticker symbol RMTI, listed here on the NASDAQ. This is a stock that I looked at back here December 20th. Stock was at about $2 a share. We looked at the numbers. I said, in my opinion, it's undervalued. You could potentially see a retracement back to the top end of this range here. I was looking for about $5 conservatively. And as you see, after we looked at it, we had a little bit of a bounce to the 20-day, and then we pulled back, retested the line, ran up to 241, quick 20%, came back down, retested, bounced again. You can see it really fought to hold this line. And now you can see over about the last 2 months, like a month and a half, we've been in this tight little downward channel, right? And what I wanted to show you is, if we back up here, we spoke about this upward channel that the stock was in, right? And I speculated back here that we were going to potentially bounce and stay inside of this triangle, which is why top end of the range, high fours, potential breakout even to 5. I thought that would happen. And unfortunately, that did not happen yet. So obviously, if you happen to jump in at around $2, you took a hit right now. But as we know with these positions, in my opinion, it's always more advantageous to piece your way in and average down, obviously, if the stock continues to slip and, continue to accumulate shares. But long story short, the stock came down here, as you see, bouncing basically perfectly off of this line. I have it right here at 152. You can see the low here was 151, top left of the screen. And then we had a little bounce today up to 165, about 2.5%. So in my opinion, I actually think it's gearing up, ready to bounce up here. And even if we get back above this trend line here, you're looking at about 2.5, which from these levels would be close to 50%. So there's multiple ways you can play this in the short term and in the long term. But we also do have earnings coming up in about 2 weeks, as you see, right around March 20th. So we could potentially reject and come back down here to retest this line maybe again, 153, like 154. But then, we really should bounce any moment and start to climb going into these earnings, because the earnings over the last couple of quarters have been pretty decent. We can see last quarter, the company net income positive, beats on the top and bottom line, 28.3 million in revenue, estimates 26.5. And the quarter before, estimates 22.9 million. The company posts 25.8 million. Analysts were looking for the company to report a loss of 3.5 cents. They actually went net income positive again and brought in a penny. So that's why if we're turning the corner now with positivity, while also steadily coming in above revenue expectations, then in my opinion, I have to classify this stock as undervalued in its current state. And you can see a slight miss here, even though they beat on the loss side. But again, before and after that, they beat on the revenue. So overall, in my opinion, I do like it. I do know that we spoke about the reverse split here back in the middle of 2022, 1-for-11 split. But then again, we've been on the up and up. And this is where it seems like the revenue has started to pick up over about the last 6 to 8 quarters. So almost similar to what we saw with Fubo, right? The financials were a mess. We had to go through the reverse stock split. We had to maintain compliance. Then all of a sudden, subscribers started growing, revenue started growing, and then Fubo started climbing, right? So almost similar to what I'm speculating could happen with STEM that we just looked at, right? STEM, same thing. They might do their 1-for-10 split, and then the market might beat them up, and then they could bottom out and start to climb up into next earnings, and then boom, they could beat revenue again, right? Because they just beat revenue. So that's why something like that could still be in play. But of course, if the reverse split happens, you're going to get smacked up. But anyway, RMTI here, this company, again, they make like dialysis machines and whatnot. Market cap very low here at 53.33 mil. But if we look again, EPS has been coming in well above estimates 3 of the last 4 quarters. Look at that growth on the net margin going from about -7% in change up to 1.1, up to 5% as of last quarter. And again, analysts are expecting 23.5 million EPS, a third of a cent positive. So 23.5 million for Q4. We can see this time last year, the company brought in a little over 22 million and lost about 1.5 million. So now if the losses are in check and the revenue continues to outpace estimates, I'm hoping that this company is probably going to post about 24.5, 25 million in revenue. And of course, EPS positivity. And it should technically bounce. That's why I'm saying it. On the technical side, it should bounce off of this trend line. On the fundamental side, it should bounce as well, because if I liked it at 2, it should bounce even more at 165, but we know nothing's guaranteed. But anyway, if we just look at these quarters here for 2024, you can see 22.68 mil, they lost 1.7 million, right? Next quarter, 25.8, they made a couple of 100,000. Last quarter, 28.3, and they made 1.4 million. So if we just add up the revenue for the last couple of quarters, we're on 22.6, that would be 47, about 48.4, and then we add up that, and we're at 76.7, and then we're going to have this, and let's just say they meet that number, you're looking right around 100 million for the year, okay? And the market cap currently is about half of that. And if we quickly check the rest of the financials, we can see that the debt has basically been holding this $14 million range, and the cash, you can see, has slowly been climbing. 2 quarters ago, 11.86 million in cash. Last quarter, 12.34 million in cash. And also, if we compare this last quarter reported to the previous years, you can see not only did debt go down about 700K, but also the free cash flow that was bigly negative here at minus 16 mil. Now it's sitting here at plus 4 million. And the cash on hand this time last year, about 7.75 million. You can see right now, again, we're at 12.33 million. So a lot of these metrics are moving in the right direction, even though the stock has been moving in the opposite direction. But again, in my opinion, I always personally view that as an opportunity to accumulate shares, build a position at even a cheaper cost. But basically, the debt is being canceled out by the cash here, right? They're almost pretty even. We have assets outweighing liabilities in both the short and the long term. Equity has been steadily climbing, as you see, was in the low 20s, had a slight dip back here, and then up to 23.5. As of last quarter, over 29 million for total equity. And the book value per share was slightly over $1 and came all the way down to 57, was holding that 70-cent range. Now, as of last quarter, 90 cents. So this company right now, after the sell-off, is trading less than 2 times their book value per share. Again, book value is if the company goes out of business, has to liquidate everything in its name, that's what shareholders would receive. So not the biggest price to book ratio, right? Less than 2. But also, as I said, a lot of the fundamentals growing, but cash and debt cancel each other out. 29 million in equity. And if we come down here and let's say again, let's just say they post flatness, right? We would meet around that $100 million mark. And if we add up, let's say slight profit or a break even, along with the loss here in Q1, that would basically be break even as well. So you have cash canceling out debt, positive equity at 29 million, revenue and potential profits break even of about, quote unquote, 100 million roughly in value. So if we add those up, in my opinion, the quote unquote fair value of this business could easily be about $125 million as a market cap, currently sitting at around 53 million in change. So that's why even a quick double back up to 3.25, 3.5 really should be a layup in my opinion. And then obviously if it starts climbing and they report another good quarter, everyone's going to hear about it. It's going to be trending. Everyone's going to jump on. And even if it pops up to 3 and change, they're going to jump in because they're probably going to be looking at the technicals like we were. And they're going to say, okay, if we get back to the top of the range, 4.5, 4.75, if we break up and out, I mean, we can see 7 plus. And even if we check back again, we looked at this last time, but just wanted to give a quick update on some technicals I'm looking at. But we can see at the end of December, Rockwell price target maintained $7 a share by H.C. Wainwright. So that's why, in my opinion, there is value here. And a lot of people may be hesitant because the company went through a reverse stock split, which again is fine. People said the same thing on my Fubo videos when I started looking at it, saying, no, the company's in trouble. I think they're going to go out of business. They're just burning too much cash. And they ended up turning it around and they grew nicely from the reverse stock split. So unfortunately, sometimes these companies need to do this just because the changes they made came too little too late, or the contracts and the revenue they finally started to generate here to make them look good. They needed to generate it back here, but they weren't able to. So, they just bled the whole time down. But we only have 3 analysts covering the position right now, all 3 giving it a strong buy. Lowest price target of 5, average of 6, highest price target of 7. And again, if we look at previous earnings, we can see three, 5 of the last 7 quarters on the EPS sides were beats, with the last 2 being positive. And of course, on the revenue side, we can see 6 of the last 7 quarters were beats, with this one being a slight miss of about 2%, which was this time last year. But I have a feeling that because revenue has picked up the first couple of quarters of 24, I would probably give the company the benefit of the doubt and probably say that they're going to meet or beat, I should say, that 23.5 million mark. But anything can happen. But either way, even if you don't like this company for the long term or think they might miss earnings, you can see in the technicals again that you could have a little quietness here for a couple of days, but we could potentially be getting ready to bounce off these mid ones. And even if you wanted to trade it, you could probably take it back up to 230 maybe and change and be in and out. And you don't even have to hold on to earnings or hold for the long term. So in my opinion, I actually like it both in the short term and in the long term, which is why I wanted to jump on and do a quick video. But let's look at stock charts real quick. You can see we had the tightening of the Bollinger Bands, and we ended up rejecting and dropping down, fighting against that mid-Bollinger Band dropping. We looked at it, what was it, like here, December 20th? Yeah, we had a little bit of a bounce. Looks like it ran up right to that 200-day and then had a rejection. Came down, tried to meet up with that 50-day and then rejected again. But again, this is a company that does medical devices and whatnot. Treatment for anemia, kidney disease, iron deficiency, hemodialysis. So this isn't necessarily, in my opinion, in the crosshairs, so to speak, of the Trump administration and the whole RFK sweeping movement, right? Those are more about the biotech companies, the actual pharmaceutical companies, and what they've been giving the people, and they're probably going to look into the pricing and the fees that they charge out to the insurance companies and whatnot, right? So something like RMTI, that's why I don't think personally they're going to be in the crosshairs. And as I always say, if I liked it at 2, I love it down here in the 160s. And again, you can see conservatively, even a retracement back to the moving average, top end of the Bollinger Band range will be about $2. So if you want, you could be in and out. That's roughly 25% value from where we currently are. Retracement back here to the 200-day would be about 50% value. And of course, depending on how much they could potentially climb going into next quarter's earnings, and then what the company could report, we can potentially retrace this entire drop start that we had around the second week of November. And before you know it, the stock could be back in the mid to high 3s, in my opinion. So I do like it. And the RSI, as we see, has been beaten up, came down to actually sub 30 benchmark here on the daily, had a little bit of a bounce today, but it's still sitting below 35. So that's why if we're near bottoming out, it could begin this momentous climb now going into earnings. MACD starting to curl, about to meet up, potentially ready to cross to the upside, which would spike this immediately, in my eyes, to mid-Bollinger Band, 178, and then it would go to around here at around $2 a share. Let's check the weekly. Weekly RSI, again, we're approaching that 30 benchmark, but technically didn't hit it yet, 37.5. And again, I showed you we're in this downward channel, and we could technically see a little bit of life, but then reject, and we could hang out for a little bit and retest those lows, which means over the next week or two, that would bring the weekly RSI, of course, even closer to that 30 benchmark, gearing it up, giving it that extra catalyst potentially to bounce and pop up, maybe like the week and a half going into earnings. MACD obviously crossed to the downside back in November, stock chunked down, and you can see we're potentially getting closer and closer. We have the tightening on the MACDs, and you could potentially start to see that curl and that cross on the weekly MACD as well, in my opinion. So overall, I feel like there's value here, and I like it. I do like it. And again, I spoke about it back here. You had a little bit of a short-term run-up, then it gave it back, and now it broke, and it started to channel down. But we do have earnings again coming up soon. And we'll take it from there. Let me pull up FinViz real quick for you guys. I didn't want to beat this. I just wanted to just do a quick update on this one. But we'll check RMTI on the other screen. 1.5% short float right now. 1.5% short float. So again, because of the new administration, you may have seen that this is a little weaker as of late, But again, in my opinion, I don't think they're the type of business to be targeted by RFK or the Trump admin. So I like this one in the fundamentals, and I like this one in the technicals as well. Let's check the pivot points real quick, then I'll let you go. Pivot points here on the weekly. Okay, next support levels down at 61 cents. That would be an extreme sell-off in my opinion, but again, weekly 50-day moving average here about 2 1/3. The 200-day is slightly above 3 at 312. We have a pivot point here at 288. So believe it or not, it could rally up and run to around $3 a share, even going into earnings. And then if they happen to beat yet again, or potentially bump up guidance maybe, then you can see that breakup. And again, top end of that range was what, like 470 something, and you can see next pivot point here at 460 on the upside. So it could be showing us what could be coming, but we had a key level, I believe, 178. Well, that's about the moving average. If it wants to break up and out of this channel and retrace to the 20-day, that would be about 178. And you can see we have a pivot point here at 179. And then the next resistance level at 198, exactly where the 50-day moving average is. About 2 1/4, 200-day moving average close to 2.5. We could potentially flash it down to the previous support level, but it did, again, drop down and then spike back, and now it's up today, even though markets were up today. But I have a feeling that the reversal could be incoming, because as they broke it down, again, we had this trend line right here at about 152 on my screen, and they dropped it to 151 with a pivot point here at 149. So if they really wanted to tank it down, in my eyes, and keep it bearish, they probably would have dropped it and tested it at that 149 level, not necessarily bounced it off of my trend line level. But I really don't think it should go that low. I really don't. I personally think the reward outweighs the risk on this one. And again, it might not be everyone's cup of tea. I know sometimes I look at large cap stocks and a lot of people don't even care. You know, looked at like Verizon, Philip Morris back in the day, never really got a lot of views. But I understand, you know, there's the influx of the younger or newer traders that maybe haven't gotten into it over the last several years. So, you know, they're looking for like an up-and-comer, a grower over the years, or something like this that can just generate them more than maybe a 10-20% return if they put it into something like a Microsoft or another brand name stock. So I appreciate the fact that some people like to look for these smaller companies, but Rockwell Medical, I do like it. I said my piece, and I'll end it there. Once again, Stocks by the Numbers, I want to thank you for stopping by. If you have any questions, comments, or concerns, drop it down in the comment section. I'm usually pretty quick to reply. Thumbs up algorithm, right? Gets more eyes on the channel. Subscribe to the channel, share the video, all that good stuff. And moving forward, of course, like I always say, I understand that markets are rocky, they're volatile, and they're very uncertain. So I want to wish all of you success. I hope everyone makes a couple of dollars. Thank you for your time. Have a good